What's good, everybody? It's your boy 8X. In today's video, I'm going to be breaking down how I made over $15,000 in the past 2 weeks trading strictly double inside bar setups. So let's get right into it. But before I go over the trades, let's talk about what the double inside bar setup is and why it's so powerful. A double inside bar is when you have an inside bar followed by another inside bar. It shows tightening consolidation over 2 consecutive candles. And we as traders take the break of the second inside bar, whether it's to the upside or to the downside, because that's the direction we expect price to expand towards. So why is this setup so powerful? Well, I want you to think about it. After consolidation comes expansion. And in this case, you have 2 times the amount of consolidation. That means the breakout is more likely to be explosive. The compression of the inside bar is similar to like a coiled spring. Each inside bar is a sign that price is getting tighter, and the breakout is like letting go of that spring. The longer the consolidation and the more inside bars, the more built up energy that gets released, which leads to a stronger move. The market presented this setup with 3 stocks these past 2 weeks: Merck, AVGO, and ENPH. And the first trade I entered was a Merck put suite. Let me show you why. So my thesis was based on the weekly time frame. We had a double inside week close with the last candle closing as a shooter, but that's not the only time frame that we looked at. You already know we don't take trades based off just one time frame. The more time frames that align with a potential actionable signal or target, the higher the probability of a strong move. So what time frames were going to be opening up on the week of Monday, March 24th? Well, we had a new daily, we had a new 2-day, we had a new 3-day, we had a new 6-day, and we had a new 9-day all opening up. So the 2-day chart closed as a shooter. The 3-day chart closed as a 1-1-3 and with a bearish engulfing 3 candle. The 6-day chart, which was also going to be opening up that Monday, was an inside 6-day with a potential CCRP. The 9-day chart, which was also going to be opening up on Monday, was an inside 9-day, setting up for a potential 2-1-2 reversal to the downside. So if we take a look at these time frames, you have a potential 2-2 down off of a shooter on the 2-day chart, a potential 1-1-3-2 down on the 3-day, which could trigger a 2-1-2 reversal 6-day, which could trigger a 2-1-2 reversal 9-day, which ultimately could trigger that double inside week breakdown. So my bias was to the downside as soon as it triggered 2 down on the week. And you can see once it triggered 2 down on the week, we got that flush to the downside. The 3-day chart triggered the 1-1-3-2 down on the 3-day, 6-day CCRP 2-1-2 reversal 6-day, and we got the 2-1-2 reversal on the 9-day chart. When price is stacked with multiple signals across different time frames, it increases the odds of a major breakdown, and that's exactly what happened. Now, the team and I entered the trade on Monday, and by the next day, we got our flush, and we were up 150% on our swing. Now, I personally was able to lock in over $6,000 in profits on this swing, and trust me, the team was prepared and we all got in. I mean, everyone ate on this trade. The next trade I took was an AVGO put trade, and it also had a double inside week setup. If AVGO triggered 2 down on the week, I knew that this could unfold for potentially 1 to 2 weeks. Double the amount of consolidation means a higher potential for double the amount of expansion. Most times you can expect 2 expansion candles in the direction it breaks out. And of course, it's not going to happen every single time. But since the double inside was on the weekly chart, I'm anticipating 2 weekly candles to the downside. Now, as soon as it triggered 2 down on the week, we were able to get 100% on this swing the following day. But one of our analysts actually held the trade for the full 2 weeks, and he was able to walk away with over 500% on this swing trade. Now, the last trade I took was another put swing, and this time it was on ENPH. Now, my original entry was based off the 4-day time frame, and I got stopped out early when it hit my stop. But I'll be honest with you, I got stopped out prematurely, and let me show you why. If my thesis is based off this double inside 4-day, we know that if my thesis is a 2-1-1-2 down, the opposite of a 2-1-1-2 down is a 2-1-1-2 up. Therefore, this is where my invalidation. When we triggered the 2-1-1-2 down on the 4-day, we hammered on the 4-day time frame, and I got out when the following candle went outside 4-day to the upside. But mind you, if my thesis was based off this inside 4-day, should I really be getting out? No, I shouldn't. Now, even though I was stopped out, I noticed that ENPH had a double inside week. And not only was it a double inside week, it also had a triple inside 6-day setup. So this is something that definitely caught my attention, and I was gonna be taking the break whether to the upside or to the downside. Now, I decided to be a weekly participant. And as soon as ENPH triggered that 2 down on the week, I knew that it could take a potentially at least 2 weeks to play out, and I was not going to get out this time. So the first day, ENPH triggered 2 down on the week, but you could see that we retraced back to the upside above 50% of the previous weekly chart. Now, at this point, I was down 48% on my position, but I reminded myself that I'm a weekly participant. This trade could take at least a week to play out, especially since it already triggered 2 down on the week. And by day 3, we got that continuation or that TTO back to the downside. Even though I was down 48%, nothing about my setup invalidated. It didn't go outside week, and the week wasn't even over yet. We went from negative 48% to 40% overnight, and we even held the trade to the next day, and we were able to close our position over 100%. Some members were down 60% on this swing, just to close it over 180% 2 days later. Let that be a reminder. When swing trading, you have to accept the risk before you enter the trade. If the setup is still valid and it didn't close above or below your stop loss, you gotta hold the trade. And that's how I made over $15,000 in 2 weeks trading just double inside bar setups. Double inside bar setups give us a preview of the explosive potential brewing behind the scenes. As my guy, True to the Strat, always says, consolidation creates opportunity. The longer the consolidation, the higher the chance of a massive breakout. And I'll be honest with you all, that sell-off that we had about a month ago, there were signs that that move was coming. All you had to do was take a look at VIX on the month. VIX closed as a double inside month, and the following month, it triggered 2 up. Once it triggered 2 up, that should have told you, oh, there's a possibility that this is not over. You can see that we came down a little bit, but then the next month, that's when we got the Trump Liberation Day, and what did VIX do? You got that explosive candle the following monthly chart. And this is why we love the double inside bar setup so much. The double inside bar setup tells you what can possibly happen in the future. It's not going to happen every single time, but I can promise you, happens a lot. And this is also another reason why I love the double inside bar. It works on any time frame and any equity. You just need to consider the time frame that the signal appears on. So hopefully this video helped you understand the power of the double inside bar setup and how you can use it in your own trading. If you have any questions or want me to do more trade reviews, drop a comment below and let me know. Don't forget to like, subscribe, and turn on those notifications so you never miss another breakdown. I'll catch you in the next one. Peace out.